Hello, my name is Jason Mercer. I'm the Toronto Real Estate Board's Director of Market Analysis and Service Channels. Over the next few minutes, I'm going to take you through the statistics summarizing residential market activity for the first month of 2018. So let's jump right in. Greater Toronto Area Realtors reported 4,019 residential transactions through TREB's MLS system in January 2018. This result was down by 22% compared to a record 5,155 sales reported in January 2017. TREB released its outlook for 2018 on January 30th. The outlook pointed towards a slower start to 2018, especially compared to the record-setting pace experienced a year ago. As we move through the year, expect the pace of home sales to pick up as the psychological impact of the Fair Housing Plan starts to wane and home buyers find their footing relative to the new OSFI-mandated stress test for mortgage approvals through federally regulated lenders. On the supply front, the number of new listings entered into TREB's MLS system amounted to 8,585, a 17.4% increase compared to 7,314 new listings entered in January 2017. However, it is important to note that the level of new listings was the second lowest for the month of January in the past 10 years. With sales being off last year's record peak, it's easy to forget that we still have a listing supply issue and broader housing supply issue in the Greater Toronto Area. The province of Ontario committed to tackling the supply issue in the region as part of their Fair Housing Plan. To date, consultations have taken place between different levels of government and industry. TREB has been happy to take part in these meetings, but it is certainly looking forward to more concrete policy moves in 2018. Turning to home prices, the MLS Home Price Index composite benchmark was up by 5.2% year over year. This annual rate of growth was driven by the condominium apartment market segment with double-digit annual growth versus the single-family segment with prices essentially flat compared to last year. The overall average selling price was down by 4.1% year over year to $736,783. This decline was weighted towards the detached segment of the market. In the City of Toronto, the average selling price was up for all home types except for detached houses. It is not surprising that home prices in some market segments were flat to down in January compared to last year. At this time last year, we were in the midst of a housing price spike driven by exceptionally low inventory in the marketplace. It is likely that market conditions will support a return to positive price growth for many home types in the second half of 2018. The condominium apartment segment will be the driver of this price growth. Finally, I would like to turn to the economic impact of housing in the Greater Toronto Area, and particularly how government coffers are impacted. The City of Toronto's Executive Committee and then City Council will meet in February to discuss the next city budget. In doing so, City Councillors would be wise to note the vast difference between last January's real estate market and this January's, given the city's inadvisable reliance on the municipal land transfer tax. The amount of revenue that the city generates from this tax goes up and down with the real estate market and therefore is not a sustainable revenue source. So with this said, it is clear that we will have an interesting year ahead, both from the perspective of changing market conditions and from the housing policy debate at all levels of government. I look forward to speaking with you again in a month's time. Thanks very much.
Brought to you by GTA Realtors.